Hello guys, and welcome to a new deep value video. Today we're going to deep dive into the financials of Adobe Incorporated, ticker symbol ADBE. Adobe is a company operating in the tech industry that offers a suite of apps for digital media creation. As of the 11th of August 2024, its stock price stands at $574 and has a market cap of 252 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 42.8, while its price to cash flow ratio is 38.3. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 73.7%, while its bottom line has increased by 83.9%. In terms of earnings per share, there has been a growth of 97.1%. However, it's important to note the change in the number of common shares outstanding, which stands at 456 million, reflecting a minus 7.2% change. Additionally, the interest coverage ratio is 58.7, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 1.16. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt-to-equity ratio, we find it at 0.27 and the overall debt-to-equity ratio at 0.48. Now let's transition to the cash flow statement. Cash from operations is 7.3 billion, reflecting a change over the past 5 years of 65.1%. Meanwhile, cash from investing activities is 770 million, showing a change of minus 270%. Furthermore, cash from financing activities is minus 5.2 billion, showing a change of 75.8% over the same period. And lastly, free cash flow has grown by 110% during the same time, from 3.15 billion to 6.6 billion, and is projected to grow to 9.6 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how the company is utilizing resources. The return on equity is 32.5%, the return on investment is 32.7%, the return on assets is 17.3%, and most importantly, the return on invested capital is 22.8%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 12% for 10 years, and a perpetuity growth rate of 1.5%, we get a fair value of $411. Secondly, using a multiple valuation of 30 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of $290. Finally, the analyst target price is $619. Putting it all together, we get an intrinsic value of $440.3. And using a 15% margin of safety, we get an acceptable buy price of $374.2, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I'd rate Adobe as a hold, as I do not believe that it's expensive enough to warrant a sale for now. But if it reaches 650 levels in the near future, I rate it as a sell. Personally, I consider investing in it only if its price drops to sub 400 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video.